The Iranian foreign minister is alarming and is indicative that an escalation in the Middle East conflict may be right around the corner. At the same time, we have the Biden administration threatening to enforce sanctions against Iranian oil. We have drones being shot down by U.S. ships in the Middle East. We've got the price of crude oil, which is really giving us a sign here of how weak the U.S. economy is. And there are numbers in retail sales that confirm that information. So let's get into it. We got a lot to talk about today. Welcome to the live stream, everybody. If you're just getting in, please do me a favor and smash that like button. Help get this information out there. Okay, so this is the message that we received from this guy here, the Iranian foreign minister. This is according to the Financial Times. And what he's telling us here is that Iran really doesn't want the war in the Middle East to escalate. And so far, it has actually seemed that way. It seems as though the U.S. and Iran are attempting to avoid a larger regional war. But when you listen to what this guy just told us, it doesn't make me feel real secure that that isn't around the corner, a larger regional conflict. So he told us that over the past 40 days, messages have been exchanged between Iran and the U.S. via U.S. interests at the Swiss embassy in Tehran. So these back channel communications to avoid an escalation between Iran and the U.S. And this is actually pretty good because an escalation there will likely cause a massive recession here in the U.S. and around the world, as oil prices will almost certainly skyrocket if this conflict really does kick off between the U.S. and Iran. But then listen to the rest of what he said here. He said that Iran does not want the war to spread, but due to the approach adopted by the U.S. and Israel in the region, if the crimes against the people of Gaza and the West Bank are not stopped, any possibility could be considered, and a wider conflict could prove inevitable. So certainly there have been a lot of kind of bombastic threats by Iranian leadership and by the leadership of the Shiite militia proxies such as Hezbollah. But so far, really, we haven't seen much. But we may see that should the conflict continue. And I don't see any sign that the attacks by the Israelis in Gaza are anywhere near an end. In fact, it seems to be quite the opposite, that despite very strong in their support of Israel, and I don't know, I mean, I just don't see them stopping anytime soon. There's nothing that they have said that indicates a ceasefire is around the corner. And then also, this threat that we heard from the Iranian foreign minister here, kind of a veiled threat, but in regards to U.S. assets in the region. This is the part that I think is really alarming and that could what the flashpoint will be for a escalation. Military officials are of the opinion that the deployment of U.S. aircraft for our region, which makes them accessible, is not a strong point for the U.S. Rather, it makes them more vulnerable to possible strikes. I tend to agree with that sentiment. It is very problematic to have multiple U.S. aircraft carrier groups within striking distance of these Shiite militias, of Iran itself, Iran, who is in possession of hypersonic ballistic missiles. I'm sure that the U.S. aircraft carrier groups have a pretty strong defensive capability, but all it really takes is one weapon to slip through that, and we could see an event that could trigger World War III. I mean, I'm not trying to be too alarmist here, but we've talked about Lindsey Graham telling us that the death of a U.S. service personnel in Iraq or Syria could be a red line. Well, imagine a strike against U.S. naval assets in the region. He also goes on to say that the war has already expanded in the region. The fact that the Yemeni army attacks the occupied lands with missiles and drones means the war has begun to expand. The fact that Hezbollah is fighting with a third of the Israeli army shows that the war has expanded. And certainly at this point, something like 70 plus Hezbollah militants have been killed by the IDF, several Israelis killed as well in exchanges, and those continue to mount. So, yeah, folks, this is a bit alarming, and this gets hit, let's just say you're going to want to get prepared because that will mean that it's on. And the amount of money that is going to be borrowed from the future and spent into the now to fund any military venture there is going to be absolutely astronomical. Now, this is another reason that we need to be on the lookout for an escalation in the region. This is a story from Reuters from the 15th. Biden advisor says sanctions will bring down Iran oil exports. So, if we begin targeting Iranian oil exports, remember, sanctions are acts of war. Sanctions are acts of war. They are a form of warfare, an economic warfare. And should we begin to target the Iranian oil exports and the Biden administration energy security advisor said in an interview with Bloomberg that we are going to enforce the sanctions in reference to what he said amounted to more than 1 million barrels a day of oil exports from Iran. He said those numbers will come down. So if the U.S. begins to target Iranian oil exports, that's going to put a significant impact on their economy. And that could very likely be the casus belli for them to escalate things either directly or through their Shiite militia proxies in Lebanon and Syria and elsewhere, also in Yemen. And we are seeing continued small escalations throughout the Middle East. This is one from USNI News. USS Thomas Hudner repels drone launched from Yemen. And so this is a first. We have actually a U.S. naval vessel shooting down a drone that was launched from Yemen in an attack on Israel. And, it's not the first drone getting shot down over there. Reportedly, the Yemenis have also shot down an unmanned aerial vehicle of the U.S. operating that region, a Reaper drone. So, the tit for tat there is escalating. A lot of these drones are being flown through Saudi airspace to make their way to Israel. So, you can see how the possibility for a miscalculation here is very high. And yet, despite all of this, the price of crude oil has been coming down. The fact that the Middle East is potentially on the verge of a major conflict. Think about this. The Iranians export something like 2 million plus barrels of oil per day. A lot of that goes to China, but that's a significant portion of global energy supply. And yet, crude oil unreactive to these escalations. Now, think about what that must mean. Think about what that implies for the U.S. economy. If demand is being so destroyed right now by the Federal Reserve's tightening of monetary conditions of credit here in the United States, if that is putting so much pressure on the domestic economy that despite this war, the price of crude oil is coming under this pressure, and it really highlights just how bad the U.S. economy and the coming recession slash depression really is going to be. Because the reason crude oil, Jeff Nelson says in the chat here, cheap oil doesn't make sense unless the world slows down. And that's exactly what we are seeing here is a massive global economic slowdown as central banks around the world, led by the Federal Reserve, the issuer and controller of the world reserve currency, tightens financial conditions and tighten credit in our debt-addicted global economy. And a very large recession is likely on the way. Now, the price of crude oil may have come under some pressure recently, but one thing that really hasn't is the price of gold and silver. You can see gold now close back to $2,000. Silver has gone up, I think, almost $2 since the last lower than expected CPI report. But if you think you missed your opportunity to get some affordable silver, you haven't, because honestly, $23.90 is still pretty cheap for silver if you look at the historical prices. And right now, SD bullion is 4, or any number in between. It's $1.29 over are still some deals out there to be had, even though the spot price has been heading up. And make sure you keep an eye on SD Bullion's site throughout this week because they are going to have more Black Friday deals. I'm not sure if they're going to have any spot deals, but they're going to have some stuff very close to that. So make sure you keep an eye on that. Now, further signs that the U.S. economy is slowing and we are facing a economic contraction and recession. U.S. retail sales fall for the first time in 7 months. This was reported by a government report earlier this week. The October retail sales declined from September by 0.1%, and that was actually a smaller contraction than was anticipated by analysts, but it was the first decline in retail sales since March. So the much touted, resilient, strong U.S. consumer that we keep hearing about from the likes of Janet Yellen and the folks at the Federal Reserve, looks like the cracks are finally starting to show here. Of course, anybody who actually keeps an eye on the real numbers knows that the U.S. consumer is anything but strong. This is the most recent New York Fed quarterly report on household debt and credit. And you can see, according to this, U.S. credit card balances just in one quarter from Q2 to Q3 increased by $48 billion. That's 4.7%. I mean, annualize that, and that is an incredible increase in consumer debt. U.S. credit card balances now exceed $1.08 trillion. So how strong is the U.S. consumer? Well, when they're out there buying groceries and gasoline on high interest consumer credit, I think it's debatable how strong the U.S. consumer actually is. And the fact that retail sales are declining now is further evidence of this. Now, this is a story from Insider Intelligence. Credit card spend remains strong in Q3, but delinquencies show no sign of easing. And they cite very interesting statistics here. Of course, we are seeing an increase in U.S. consumer credit card debt over $1 trillion now. But look at this. This is potentially even more alarming. More than half of U.S. consumers say they can't pay off their entire balance and accrue interest each month. This is the highest level in years. So not only are interest rates dollars, which is the highest in 10 years, a very large number of consumers are not paying that off. They are paying interest, very high levels of interest on that debt. So the predictable outcome of this is that delinquencies are going to begin to rise, and that's exactly what we are seeing. A Wells Fargo 30-plus day delinquency rate hit 2.7%, up from 2.39% the prior quarter. Now, this is also in excess of pre-pandemic levels. Before the pandemic in Q3 2019, this rate was 2.52, now at 2.7. Same story at JP Morgan. Their 30-day delinquency rate for their credit card services rose from 1.7 to 1.94. This is compared to pre-pandemic levels of 1.84. And then at Citi, 90-plus days past due rate was 1.3. In quarter three of 2019, this rate was 1.25. So, consumers had a break during the pandemic. They had extended unemployment benefits. They had stimulus checks. That's all gone now. That's done, and the cracks are really starting to show. Consumers are on their last leg here in the U.S. with no signs of credit loosening any time. However, that is what's going to happen ultimately. The Federal Reserve in 2024, I believe, is going to be forced to begin cutting rates, potentially even returning to quantitative easing and debt monetization directly, depending on the size of this incoming deflationary collapse. I mean, it's going to affect the banking sector, most likely, the worst. We know many of these regional banks, the smaller ones especially, are insolvent. Just a couple weeks ago, we had the fifth bank of 2023 to fail. So far this year, the assets of all the banks that have failed exceed the number from 2008, but it is when banks begin to collapse. What do you think the Fed is going to do? They're going to print. They're going to print as much as they need to shore up this rickety economy, this house of cards. And when they do, it's going to have to be more printing than in the past. So when they start cutting, expect the price of silver and gold to skyrocket. Thanks for watching, everybody. Don't forget to smash that like button, share this video with your friends, and I will catch you next time. Stay safe and happy stacking. Smart Silver Stacker,